Welcome to this week's episode of Your Stock Request for the 26th of November. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Bendigo and Adelaide, Star Entertainment, Electro-Optic Systems, 7 West Media and Nearmap. So if you have a request, send it through. Make sure you have signed up to our newsletters. If you enjoyed these videos, please share them on social media or even leave us a review. Remember, our core business is portfolio management, so if you'd like me to personally help you with the buying and the selling, then please let me know. I'll explain how that works. And any advice here, of course, is general only. Okay, so we've started off with a daily chart of Bendigo. As we could see, like most banks, drifting back for much of the last 6 months. Then we had a bit of a break here above 650, and then the gap up above 7 was the next, I guess, indication that they were going to have a bit of a run. So we've seen a nice rally in Bendigo so far. Obviously, it won't hit up forever, but if we have a look at nearby resistance, probably switch to a weekly chart, we could see that getting close to these sort of levels, even closer to sort of $10. There's been a number of turning points in the past, so I think there'll be there could be some resistance at $10, of course, but the momentum is still pretty strong, so it's still a hold. You've got to stick with the momentum, and I guess it's another lesson as to why it's often not good to be selling into strength. So we could see that even here there would have been obvious resistance. You would have thought at $8. It's had a fantastic run. It was starting to show up as overbought. I'm sure a lot of people were selling at this point, but you just have to stick with the trend. And as we could see, there wasn't any sort of resistance in the end at $8, and it's continued on. So I couldn't be buying it up here, couldn't be chasing it, but I'd be happy to hold it if I was in it. And again, yes, there's strength, but you can be surprised at how far these things can continue to push on. Okay, Star Entertainment. So we quite like this one. This is one that in our research in early November, we did some fundamental and technical analysis on it. We're quite positive on it. I think it's looking pretty good. So most recently we could see that, if we'll just zoom in a bit, so we could see that after gapping up here it then consolidated for a bit and sat on top of this October high, and then yesterday it's very strongly sort of pushed higher out of this range. So I was actually buying some more of it yesterday for some people on this breakout. So I think the trend will continue. Obviously we'd be eyeing these old peaks as potential resistance to start with, but either way the momentum is there. It's heading the right way. Happy to buy it here. Okay, EOS. Now this one's lagged the market in the last few months. I mean, as we could see, just looking at what it's done since June, it's still stuck in a range. So our market's pushing up here now. Whereas this is still stuck in its range. And we could see that yesterday, a couple of down days there when the broader market was up. So, not the best price action, just a little bit concerning the way it's been trading there. So I can't get excited about this. I'd really want to see it push through here. I mean, if it can close above 7, then we know that it's clearly out of this range. And then it's got some free air to head to higher levels. But at the moment, I'm just not happy with the way that's trading. Okay, in 7 West. So like most stocks, bit of a trading range for a few months, broke out in October, and now it's heading higher quite nicely. Look, the move looks fairly sustainable, so it's not heading up in a straight line. It's not sort of gapping up every day, moving in a straight line. It's, slowly making its way higher. It looks pretty sustainable to me. So I'd be running a trailing stop here, probably around that 22 cent mark. That's the last sort of low point. I think if it was to fall through that, that would be a negative, but at the moment, I'd be happy to hold it and just run a trailing stop. Okay, and near map. So it had been trending well up until a couple of months ago. So I mean, I think we looked at it in one of the videos here. We were eyeing a breakout, and we got a nice swift rally, but we could see that it didn't last, unfortunately. So this little gap down here, I guess, was the first negative sign. But mainly when it's gone back into this range, that's basically a negative. It's not, it shouldn't be back in this range. If it's going to break out, it should stay on top. So that was, I guess, the first warning sign, and we could see that since then it just hasn't made any progress. So, it seems to be finding support here, but at the same time, it's clearly getting resistance at sort of this 270 region. So it's struggling now. It really needs to hold above, I think, 220. If I saw it under 220, I think that would be a negative. All right, well, that's all for this week. We get a lot of requests every week, but send your stock through and I'll try to include it next week for you.